Everybody, hope everyone is doing well. We're going to start the live show here in just a few moments. Like to let these YouTube alerts go out to let everyone know that we're live. So we'll just give everyone a few minutes. Welcome in. If you're new to the show, this is the real estate investing show where we talk about all things real estate investing, helping you become a more intelligent real estate investor. And on today's show, we're going to talk about housing markets and what to avoid in certain housing markets, when to know that you're picking the right housing market to invest in. We're going to look at a couple of key points that I look at personally when we're investing in different housing markets, where we are building our new construction properties, etc., etc. So I hope everyone is doing well on this. What day is it today? It's Wednesday, isn't it? It is Wednesday. It is Wednesday. Let me know in the chat how you're doing here. Fam Jackson is here. Fam, good to see you. Fam is here. Nicole is here. Let's see, Fam Jackson is here. Nicole is here. Lindsay is here. Rock and rolling. Sup, Clayton? Tony Joslin, nice to see you. Welcome, welcome, welcome. There's Tony. There's Frederick. Good to see you. Fix this thing real quick here. Bill Purdue is here. Good to see you. Lovetta Mullins is here. Hi, Lovetta. It's got to be great going through life with Lovetta with the word love in your name. It's got to be good karma for you, right? Like you got to think like a person with the name Lovetta is not going to be a mean person. I'm just saying, like I just can't think that that's going to be the case. Like, have you met that Lovetta? She's always rude. Instead, you've got love in your name, so clearly you're going to be a kind-hearted person, I think, right? Like, people always want to be around you. All right, Bill. Bill said, I made it. I was prepping for the show. Had a salad for lunch. Good for you. Alan is here. Hey, 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 Alan. Alan R. Is it Sagaski? Am I saying that right? Lovetta says, yes, the world needs more love for sure. It's true. Grover. So I got Grover a... Natalie's been making fun of me for this, but I don't care. He is... I think he's super comfortable. I got him a little sweater. Yes, I did that. I can't believe that I did that, but I did it. So I got him a little sweater because he's always cold. See? That's love, Lovetta. Look at that. Natalie thinks it looks ridiculous, but I don't care. See? Just comes down over his butt. Welcome, welcome, everyone. We're going to start the show in just a moment. Drop the music down a little bit. Yeah, I think, he likes it. I think he's nice and snuggled. But somehow he wakes up and he doesn't have it on. Like, I don't know how he slips out of it because he sleeps underneath the covers. So I think he's just like moving around and he kind of just like it pops out somehow. He's very spry how he does it. My little girl thinks he's cute in it. All right, all right. Cheryl, good to see you. Cheryl is here. Nice to see you, Cheryl. All right. All right, all right. This is me trying to write our newsletter in the morning, and he sits on my lap and sleeps, so I only get the use of one arm. So I can't really, it's hard to type. All right, welcome. All right, I'm going to pop this off. So again, today we're talking about different housing markets and sort of 6 red flags that you should be looking for when you're investing in these different markets. These are really, really important things that we look at before we take the plunge and start investing in different real estate markets. Very important for our team. All right. Pull this chat off here and we will get started. Kind of open it up for some Q&A here in a few minutes. I should mention, if any of you are interested in working with a full-service rental real estate company, that is what we do at Morris Invest. Again, we're building anywhere between 500 and 600 homes per year. If you're interested in working with a team that will handle everything for you from top to bottom and help you build financial freedom with a cash-flowing rental property, all you need to do is show up and be able to work with us on our team, and we'll help you build a roadmap to success. So you can go to morrisinvest.com. That's our website, morrisinvest.com, and just click on the little book a call button right there, and you can jump on the phone with us. Pick a time slot that works for you. So just click on the book a call button right there in the middle of the screen. You can watch our video. You can see all about our team. You can learn about our team. You can learn about everything that we do. You can see our rental properties before and after our new construction. Get a look at that, learn about the entire process. That's what we do. So I was looking at the numbers actually the other day. I have now done, it's like over 1,400, or it might even be more than that now. I think it was well over 1,400 real estate transactions, homes in the last few years, just within the last 3 years. Crazy. So helping a lot of people build financial freedom, getting these houses, and helping tenants get a great place to live, helping the community. Our team in Texas was just congratulated by the mayor of Lubbock, Texas, who came out and saw the new construction properties and thanked our team for the great work that we're able to do these communities, transforming these communities in these school districts, which are the best school districts where we're building our properties. So thanks to the entire team, our amazing team. If I don't say it enough, then I mean to say it right now. All right. All right, let's get started, shall we? Welcome in, everybody, to the Investing in Real Estate show. I'm Clayton Morris. On today's show, we're going to talk about housing markets, specifically if you're considering investing in a certain real estate market. I'm going to share some big red flags that might pop up in your research. I get asked constantly about various rental markets. I get emails on a regular basis like, hey, Clayton, I'm thinking about investing in this town or this area. But the problem is most of the time I just don't have the data to give you a clear-cut answer on this town or this state. So I wanted today's video to act as a guide or a checklist for you so you can determine whether a rental market is worth your time and investment. Literally, taking these 6 red flags into account can save you an entire bucket of headaches. Can you have a bucket of headaches? I guess you could, right? Or a bucket of pain. A big bucket of problems, okay? So if you can avoid these red flags, then you are well on your way to making a smarter decision in real estate investing. So for those of you that don't know me, I'm Clayton. I'm a longtime real estate investor. I started real estate investing now almost 15 or so years ago. And when I was working a 9-to-5 job, I started investing in real estate on the side. These are things that we were never taught in school, right? For most of you, probably weren't taught how to invest in high school. The most I was able to learn was how to balance a checkbook. They teach you to work for somebody else, a 9-to-5 job. And so I was taught to work for somebody else. I was taught to balance a checkbook, and that was it. No financial intelligence. So I had to learn this on my own. And I learned the hard way. I was $75,000 in debt. I lived all across the country trying to make my way in the TV business, working for somebody else. But I always noticed that I was always renting from people. And half the time I never even saw the landlord. I never even knew the person, right? But I was sending a check to somebody. So this person had renovated a property that I lived in, and they were making cash flow from me. And something clicked at some point once I lost my job at one point. And I said, God, I don't want a boss to ever control my destiny anymore. I want to build something for my family that can't be controlled by somebody else. And that's where real estate investing took hold of my life, and started buying properties, single families and duplexes. And that's still what I do today. To me, that's the number one way to build wealth. And the key thing, though, is you always hear the term location, location, location. It really is true, because the single family home that I can buy in West Texas is going to yield way higher rate of return, and is going to be in a much better state than it is if I bought that same single family home in California, where I'd pay 20 times as much. I'd be in a non-landlord friendly state. I'd be paying taxes through the nose. So location absolutely matters. So let's get into these 6 red flags. Number 1 on my list, high vacancy rates. Okay, these are vacant properties. That means somebody's not living in this rental property. And that is a red flag. Think about where we are in this economy right now. If you've been paying attention to any of the headlines, you realize that we are in a housing crisis. We are in an affordable housing crisis, meaning we need houses. People need a place to live. Mortgage rates are very, very low, but the cost of homes is skyrocketing. That means even millennial buyers are having a hard time now even getting a loan or even getting a home. They can't find it. They're being beat out by the big institutional investors. Baby boomers are saying, hey, sorry, millennial, I've got it in the bag. I'm buying this home. So we do not have enough homes. We do not have enough places for people to live. So there shouldn't be a high vacancy rate in an area where you're trying to invest. If there's an area, or you're looking at this particular town and you're doing your data research and you see that there's a high vacancy rate, that should be a red flag. I mean, this is one of the first things you need to look at when considering a rental market. Do you know the vacancy rate? Here's why it's important. When you have a tenant turnover in a property, you want to be able to fill that spot very quickly. A high vacancy rate is a big problem. Stay away. So, unless it's the holidays, I always say this with a caveat, right? We have a waiting list on our properties at Morris Invest, the new construction properties that we build at Morris Invest. Like I said, we have, as soon as they're done being constructed, we have tenants that are ready to move in with our property management team so it can cash flow immediately, right? And because we're in the best school districts, we are in high demand. So again, we have tenants that will walk by our construction and ask the builders like, hey, when are you guys done? Because I'd like to rent this property because it's in the best school district, in the best area, next to the job growth, right? And so you want to make sure that you don't have months and months and months of a vacancy rate. You want to be able to fill that property. Let's say a tenant lives there for 5 years and their child graduates from that school and child moves off to college, and now that family says, you know what, we're going to move, and we've been here 5 years. Great. Okay, so we should be able to get in there and take care of cleaning the carpet or replacing carpet if there is carpet, doing paint touch up, getting the home ready again with the property management team so that a new tenant can move in. And we want to be able to do that pretty quickly. And tenant turnovers are going to be your highest cost of things, right? I mean, it can range anywhere from a few $100s to a few $1,000s. We want to mitigate that. We want to keep that low. We want tenants to stay in a property for a long time. Again, most of the properties like I'm showing you here on the screen, we have tenants that stay well past 5 years. I mean, gosh, 5 years? Think about that. Think of how little headaches you have to deal with from a vacancy perspective and having to get in there and clean carpets and update the property. I've definitely, when I was starting out in this business, I had vacancies on properties that it seemed like this one property, we were constantly filling it up. Well, rookie mistakes. I want you to learn from my early mistakes in this career. Okay. I don't want to have to keep filling this property up. Vacancy rates are a big problem. I want you to stay away from it. It's very easy to look up the vacancy rates of a particular town. And you can also find that very easily from talking to the property management companies in a particular market where you're thinking of working. Number 2 on my list, crazy high appreciation. This should be a red flag. Now, we all like appreciation. You might be saying, Clayton, why wouldn't you want appreciation, right? Why wouldn't we want to have crazy high appreciation? Well, I'm going to tell you that that is a red flag because that means that you could be in a bubble market, right? New investors sometimes think like, I'm going to, if you look at some of these different housing opportunities and you think, wow, this is an area that I keep reading about on the news. It's absolutely crazy. The homes here are just like, I see somebody buy the home and then the next week it's on the market and it's selling for like $30,000 more than the person just bought it for like a few months ago, right? These things just keep appraising like over and over and over. They keep doing so well in these markets. Crazy high appreciation. New investors sometimes make the mistake of thinking that high appreciation makes it a good market. It does not. In fact, it makes it the opposite. I want slow, steady, boring, average appreciation. I want you to see the live video that I recently did on the top 10 overvalued markets and why you should never invest there. I specifically talked about that. We'll drop that into the description below. But when you're in an area like a San Francisco or these overpriced markets like Boise, Idaho, where things are skyrocketing, I'm telling you, I've got family that lives in Boise, right? And I'm going to tell you right now that they bought a home for $300,000 just a few years ago, sold it about a year and a half later in the $500,000 range. You might be saying, hey, Clayton, that sounds great. Yeah, maybe if you're flipping houses, okay. If you're building new or you find something you can renovate and do, that's for a whole different animal. But if you're in these crazy areas where prices are skyrocketing, that means what goes up must come down. So be very careful about crazy appreciation markets, bubble markets, where things can fall flat pretty quickly. Be very careful about speculative housing markets. Number 3 on my list, not landlord friendly. You're going to want to look into the rules and regulations in the state and the city you're planning to invest in. What does the eviction process look like? What happens with those security deposits, rental licenses, rent control, tenant damages, lease agreements? This is not something that you want to discover after you've invested somewhere and then you suddenly have a problem. Make sure you do your due diligence ahead of time and see how the laws in those particular states apply to you as a landlord. Are they landlord friendly or are they not? It's a big red flag, my friend. Specifically, take New Jersey as an example. New Jersey is not landlord friendly. A number of years ago, my wife and I did, as an experiment, we bought 10 properties in South Jersey. It was a good deal. It was near a military base. It was a test. It was a lower tax part of the state. And again, it was a test. Huge mistake. Huge mistake. We had 2 evictions, like almost right out of the gate, and they took almost a year to complete because you have to hire a lawyer. You have to get the judge involved. It's a nightmare. Absolute nightmare. And that was just the beginning of our headaches. A non-landlord friendly state. You may be investing in areas where the city wants you to get a landlord license. That's just a money grab. That's just a money grab by the city council, the city government to try to make more money. So you need to register as a landlord? You need to go through this process of registering as a landlord? Are there also like landlord licenses? Are there rental licenses? All sorts of like red tape and big hurdles that you need to jump over. For instance, in California, there are certain cities that last year voted that you cannot evict, you cannot basically tell someone that you can't rent to them if they have a violent crime on their record, like they've just been out of prison. Okay, you have to basically say, yeah, okay, I'll rent to you just as likely as I would rent to this person over here. And as me as a landlord, like you're going to make that determined. Now the liability is on me, right? What if that person, I'm all for rehabilitation, but what if that person does something violent or does something awful? Now that's on me as a landlord. The liability falls to me, not him or her. That's a huge problem. Again, California. Again, another reason not to invest in California. What starts in Oakland trickles to other cities. So get ready. Again, huge red flag. You want to make sure the state is landlord friendly. Number 4 on my list is a lack of job growth and a lack of diversity of jobs. To me, a big red flag would be one employer in the market. There's one supermarket in the market. There's one McDonald's. That's something we do not want, right? We do not want like just one grocery store in the market. Well, everyone goes down to the Kroger, and that's the only employer, right? Because what happens in that market, if that employer then suddenly goes out of business, your tenants now are out of work and can't pay rent. You want multiple large employers. You want warehouses, factories, universities, hospitals, healthcare systems, schools, all of that. You want job diversity that ensures availability and stability for the tenants. If you look at the properties that we do at Morris Invest, you'll find that this is a duplex here, which you're looking at, one of the duplexes that we built. And that means that one family lives on one side. It's like a 3-bedroom duplex. And so the entrance is on this side and the other entrance is on this side. It's like 2 single family homes basically combined. And 2 different families. Well, I'm going to tell you right now that almost every family that goes into these properties has a totally different job in a totally different sector of the economy where we build our properties. They don't all work for the Walmart. They don't all work for the hospital. We have tenants that work for the university system. We have tenants that work for the hospital system and healthcare and energy sector and all of these things. I mean, look at they're all different. So you want to make sure that you're in areas that have a diversity of jobs that provide stability for the tenants in these particular properties. That way that they have in fact, if there's a downturn in the economy, not every sector is hit. That's also important, right? Hospitals aren't going to China, but the manufacturing plant might, right? So, and the University of Texas is not going to China. Has it suddenly become the University of China, right? So you want to make sure you have things that are going to stay there, where that job growth is going to continue to translate to really low unemployment rates in those particular areas. Number 5 on my list, another red flag you want to look at is high crime rates. High crime is usually almost always as a result of poverty. It's almost always a result of low job availability, low wages, no jobs equals high crime. Always, always, always. Heavy crime in a rental market is a big red flag. So it's not just the crime that's the problem, right? Even if it's just petty crimes or people breaking into cars and things like that, that leads to bigger crimes. At the very least, you want to see a downward trend in crime. Don't make the mistake of investing where there's high crime. You'll just have headaches for years to come. Take it from me. You do not want to do it. If you are speculative and you think, maybe I'll invest in this area because it's really going to turn around in 10 years from now. Great. You want 10 years of headaches before it turns around? No, thank you. Number 6 on my list is lack of property management teams. I've made this mistake over the years. There was a property that I owned in very rural Pennsylvania, and it took a long time to find a property management team. It was a mistake. I should not have done the investment. It ended up okay. I ended up having the property for 10 years or so, and it was always rented. And in fact, that particular property manager used to send us the rent check via handwritten check. It looked like, the handwriting was pretty awful. It was like, okay, here's our check. But I actually liked getting that paper check in the mail. I was like, okay, here's our rent check, But it was hard. It was like the only gig in town, the only property management team in town. And what if this one guy decided to get out of the racket? Then I'm screwed. So you want to have options, right? You want to have options because they are everything. You wouldn't go to a car dealership that only had one car. I want you to interview a few different property management companies before you choose a property management company. If there are fewer than 3 companies in that market, that's probably a red flag. Not always, but again, you should have options. What's their experience level? I want you to check out the video that I've done on property management teams, and you can see the interviews and the behind the scenes of one of our property management teams that we work with. They're fantastic. And you can see us walking through their offices. You can see what a really great property management team looks like. We'll have a link in the description below for that, so you can see that. And you can also meet some of our tenants in the property. We actually got to sit down and talk with our tenants, and we wanted to find out from the tenants, what is it like working with our property management team? Do they treat you well? and their customer service is off the charts. They like working with our property management team. So that's a good thing, right? They have a good relationship with the tenants. You also want to find out, how long has this property management team been in the market? Have they been here long? We won't work with a property management team in our different markets unless they've been there for at least 5 years. I also want to know about their occupancy rate, okay? So vacancy rate we talked about at the beginning, right? Vacancy rate is one thing. That's the demographics of the town, the vacancy rate. But what is this property management company's occupancy rate? Do they have a 96% or higher? I'm not working with them unless they have a 96% or higher occupancy rate. What is their communication style? Also, how quickly do they respond? We are in a day and age that when we go to Amazon.com and we can't figure something out, we want to be able to chat with someone right there on Amazon and get an answer, right? So a little chat window will pop up because, that's kind of where we are in 2021 and 2022, right? We want immediate answers or close to immediate as possible. So how does that property management team respond? Do they get back to you within 24 hours? Great. Do they take a week? That's not great. Do they respond via email or do they like to text you? Do they get on the phone and have a phone call? Like, what is their communication style? How do they vet the tenants? Do they do background checks on the tenants? I sure hope so. Are they doing criminal background checks? Are they checking to make sure they don't have any evictions in their history? All of those things are very important. What does their job look like? How do they vet the tenant? Property management is totally essential to your success in any market. So folks, those are 6 things that I think are really important for you to avoid and really red flags that are sticking out all over the place when you're picking a real estate market. Make sure you try to really adhere to this. This is really going to help you tremendously. Obviously, there are more, but this is a great framework that you should have on your list when you're entering into a real estate investment. Starting out with these 6 red flags will really save you a lot of heartache and a lot of trouble. Drop me a comment below. I'd love to hear your thoughts about it. Please make sure you watch my other videos where we talk about property management. We'll link that up here, and you can walk through and see our property management team and everything that they look for in a tenant and a market. All right, let's open it up for some Q&A here. If you guys have any questions. Thank you, Lindsay. Any questions here before we wrap things up? I'd love to just take a few quick questions if you have anything. Let me know. And I should mention as we're kind of gathering questions up here, I'll put a little music up for you. On our website, we have tons of resources. If you click on the blog section, if you go to morrisinvest.com, you'll see that we have tons of great articles. We put a lot of work into these articles. So we teach you, how much profit you should make on a rental property. We teach you why flipping properties is a bad idea. Kind of walking through different things. How much does rent on a property make? How to furnish a rental property? How to replace this is one of our most popular posts. How to replace a $70,000 a year salary with passive income through real estate. That's there. We have all kinds of videos and things you can check out on the website. You can check out our reviews page as well. You can see what a lot of our recent clients. We like to update this almost monthly with, let's see if we can find Bill. Bill, are you on here? Let's see if we can find Bill. There's Norvella, there's Jarrett. Jarrett and his wife are teachers out of Florida. They own one property through us. There's Larry. Does Norvella have 2 of them now? There's John. He came to visit. He was actually in Texas at the time visiting his property when our team caught up with him and we had a chance to talk with him. Let's play that. You can see a little bit of John there. So he's standing in front of one of... Yeah. He's a dentist.
Been doing rental properties, I guess, for the last 6 years. Never had anything in Texas. I've done everything. I don't have anything in Utah either. It's in Missouri. I've got North Carolina, South Carolina, some other places. But this looked pretty cool. And I kind of found it with, Morris Invest, those guys, and started looking at some of their stuff on YouTube, really. And then started talking with them, and it sounded pretty intriguing, so I had to come down and check it out.
So that's John. He came down after he got one of his rental properties
It's easy.
and saw one of his properties. So again, you can come down and check out all the reviews and things like that on our website. There's just so much more. We have, look at all these videos here. You can see so many different people from around the country and around the world who've taken the plunge and gotten their first, second, or third properties with us. So anyway, check that out. Let's see if any questions. Oh, Bill, yeah, you're in that. That's right. Bill's in the tutorial video. That's right, Bill. That's right, sir. Cheryl wants to know, how is Arizona for rentals? Well, I can tell you that I do not do any rentals in Arizona at the moment. And frankly, I just don't have enough data on it. It's an area we've looked at, Phoenix, in the past. One of the things you need to do is, you're looking at Scottsdale and Phoenix, and we've analyzed these markets, and you're looking at high appreciation. And so you're looking at high appreciation. You're also looking at, there's a lot of other factors we look at too, not just the 6 that I mentioned today, but as we're analyzing markets, contractors, we have a great team of contractors. So what's the availability in these different markets for construction? Availability of materials and things like that, types of building materials, and costs too, associated with pools. That's one thing in Arizona, pools and things like that. And just overpriced property, overpriced property in Phoenix and Scottsdale. What does that infrastructure look like? And what do the school districts look like? If if we're going to build in Phoenix proper or Scottsdale proper, then what is the property cost going to be for us to start to build a similar property and get a great rate of return there? There's definitely great parts of Arizona to invest in. We don't have anything on our portfolio, and that's not something that we're currently building in. Let's see. Tia. Is it Taya? Or Tess, I'm sorry. The screen is so far away from me, I can't see it. What's the best way to find rehab construction workers outside of your own area? Great question. Honestly, a mentor in the sort of flipping space once told me a number of years ago, for us, when we're building an infrastructure, because we're doing this at scale, so like with our team, we're building a lot of properties. And so we've got a team that's working for us. They're not like day laborers. They're popping around to different projects, and they're going to frame one house over here and then hop over here and frame it for a different person. They work for us, and they work for us for a long time. If you're just trying to find one person to come in and do work, honestly, one of the best ways to do it is just Craigslist. There will be, if you look under the in the construction section, there'll be construction workers that will post in the construction section on Craigslist. So I would go ahead and check that out and ask them to bid out your property. And here's the job. You can they'll post for free, and you can get free bids that way. I know things are really tight. Construction right now, it's incredibly difficult to find construction workers. Really, really difficult. There's just, we saw Zillow. I don't know if you saw the news with Zillow about 2 weeks ago. Zillow has their iBuyer program. And Zillow basically had to put the brakes on buying any more properties right now because they said, we just don't have the construction workers. We can't do it. There's just such an incredible demand for tradesmen right now, electricians, plumbers, framers, carpenters. They just can't find them. So Zillow had to end its buying program of construction properties. It's bad. So, it's going to be very difficult. Another thing that you can do is just reach out to some of the larger builder companies who are doing construction in your area. If you see signs, if you see construction signs of different companies, get those phone numbers and call them and ask them, do you do smaller properties? Do you do individual properties that aren't your own? And see if they'll do that for you as well. But I gotta be honest with you. Everyone is so slammed right now that stuff is pushed into like 2022 and even further and beyond. So it's very, very difficult. Cheryl, you're welcome. Frederick, thank you. Says, great content, Clayton. I'm currently on the waiting list to buy 1 or 2 properties with our team. Awesome, Frederick. Working with one of your knowledgeable team members, Johnny. Thanks for all you do. Frederick, thank you so much. Very kind of you. Very, very kind of you. Lindsay says, with the market being so high, what's a normal appreciation rate right now? Oh boy, normal appreciation. I mean, look, inflation is about 2%. Normal appreciation conservatively for a rental market or for real estate is going to be between 3 and 4%. Historically, you want to, that's real estate has outpaced inflation, right? And that's why it's a powerful hedge against inflation, 3 to 4%. And if, again, inflation is hitting around 2% now, and the Fed is probably likely going to let it run hot for a little while, so we could be looking at even 3%, maybe even higher inflation. So again, as long as we're outpacing inflation with appreciation, we're good. Now, if we're talking like 8, 9, 10, 11% appreciation, like we saw in San Francisco, or we saw in parts of Florida, or we saw actually in Las Vegas and other things, bubble territory here, that's when that should send off warning bells to you. I mean, I'm talking Boise, Idaho as well, 7, 8% appreciation. Warning, 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 Will Robinson, danger, 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 danger. Yeah, I mean, just think of, Lindsay, kind of on that question again, just thinking of again, the whole reason we're investing in real estate is because it's perhaps the ultimate hedge against inflation, right? So, you've got a few asset classes that are really good at hedges against inflation. Real estate at the top of the list. And maybe gold, precious metals, silver, and also art. Expensive artwork has also been typically a hedge against inflation. But if you want to go out and buy some Picassos, like that's usually going to maintain itself well ahead of the market appreciation rate. Well, thank you guys. Thank you for joining us. See, we don't have any other questions today, so I will wrap things up. Keep you tight here on this Wednesday. Get you out of here without no one getting hurt. Hopefully you found this content valuable. Go back and review this. Mario says, I'm also on your list to buy 2 properties, hopefully by the beginning of the year. That's awesome, Mario. Can't wait to, hopefully we'll have you and Frederick. I'd love to have you guys on the podcast at some point. Tell us about your experience and hear about your journey. Would love that. So hopefully you have a great holiday season coming up here. That's why we invest in real estate, right? We invest to protect ourselves against inflation. One of the stories we had today we were talking about is this is going to be the most expensive Thanksgiving perhaps ever, up 20%. So again, when you're seeing this runaway cost of inflation right now, you're seeing all these prices going up. That's why it's so important to have assets that produce cash flow and that are a hedge against inflation. So go out there, everyone, take action, become a real estate investor. I believe it's the number one way to build wealth and to protect yourself in this crazy environment. We'll see you next time, everyone. Thanks everyone for joining us today.